Welcome back, everybody. Jeff and Nikki Kai here with Keller Williams Real Estate in Park City, Utah. We are visiting again today with Ace Allak with People's Home Equity. He's been our go-to guy here. It's who we're giving our daily and weekly updates right now because things are kind of going crazy. So I'll introduce Ace. Give us a little update on what's happening now. I know it's changing by the minute, so whatever you can do to help us out.
Hey guys, how you doing?
Good. Good morning.
Good to see you again. Things have stabilized a little bit. Rates are still really low, mid threes. They still vary. There's some volatility, but for the most part, they've been very, very low. Reminder, rewards the prepared if you're looking to refinance. Great time to purchase. Still at 100-year lows. So awesome. It's a great time.
Today, we want you to talk a little bit more about second home mortgages. Can you dive into those specifically, those rates, down payment options, and then after that, the second home versus investment properties?
Yeah, you got it. So second homes, nothing has really changed with second home and investment properties as long as it's conventional loans. As a reminder, like we talked about last week, conventional loans are still strong. They're still the same, the ones that are Fannie Mae and Freddie Mac backed. But second homes, you can do as little as 10% down on a second home. Rates are very similar to primary residence, especially as you get up to 20% down. So it's pretty much the same as a primary. You can do a second home in the mid threes right now with 20% down.
So Park City, half the buyers up here are second homeowners or investors. Can you explain the difference, what you're looking for from a lender point of view, if it actually is being purchased as an investment?
Yeah, Park City has a little more flex than most places. So it used to be that a second home had to be a certain number of miles away. But even if you live in Salt Lake or you live near Park City, you can actually have a second home in Park City because it's considered a resort town. So capital investors view a resort town with a lot more flexibility as far as second homes go. Now, as long as there's no lease in place and you don't already have a home there, it should qualify as a second home if you plan on not renting it more than 6 months. So and the main difference really is interest rate and down payment options. Investment rates are going to be higher, usually to the tune of about 0.75%, and they'll require a minimum of 15% down. So 10% down for second home, 15% down for investment properties.
Okay, so when it comes for how people are getting their down payment, are cash out, refis, and pulling equity, is that still an option?
Yeah, most people who've hung out for a minute have some equity in their home. We won't cash out above 80% loan to value because that's the responsible thing to do. And going up to 80% loan to value, yeah, absolutely, you can use that cash to buy a second home. The cash is yours. Anytime you do a cash out refinance, I have people ask me this all the time. We don't care what you do with the money. If you cash out, it's your money. You do with it as you will. A cash out refinance, Jeff, is also a better option right now than a home equity line of credit for a couple reasons. Home equity lines of credit are variable and the rates are higher. So what you see is usually an introductory rate and it will change in 6 months and then it's variable. So knowing what we know, like rates are probably going to go up from this point, right? Considering we're at a 100-year low. I don't love home equity lines of credit. The other one is that home equity lines of credit, a change in the tax code last year, made them no longer tax deductible unless you're using them to improve the home, right? And you got to really carefully document that. So if you're doing a cash out and it's a cash out refinance against your primary, you can still write off that interest so long as it's your primary residence.
Awesome.
Yeah.
So any other things happening in the mortgage world you want to update us on, or?
Yeah, things have continued to be really, really strong. Something that people need to realize about waiting for home values to drop or sink is that will there be adjustments in some of the jumbo markets? Yeah, most likely. But, Park City, Summit County, Wasatch County, loan limits are $762,000 there. So anything up to $762,000 falls into that 10% down, second home, 15% down investment. There's options there. There really is. And the crisis that happened in 2008 really was a depression. Unemployment hit double digits. So, and it was caused by a mortgage crisis. But if you look at the previous 2 recessions, home values, depending on the area, some went up, Some went down a little bit, but they stayed pretty strong. So just because there's a recession, to project what happened in 08 and 09 on home values right now would not be an accurate comparison, because this is being caused by a pandemic. It's not being caused by a financial and a mortgage crisis, right? As most of you know who've gotten a loan, you're getting underwritten, you know. It's not easier to get a loan even a few months ago than it was a few years ago.
Awesome.
Sure.
Well, we appreciate it, Ace. We had great feedback last week. And, you know, if anybody out there has questions and wants to contact us, give us a call or email. And how can they get a hold of you, Ace?
Yeah, call me. You guys feel free to call me directly at 801-694-6439 or email aceteam@peopleshomeequity.com, all spelled out. That's aceteam@peopleshomeequity.com. That'll get to my whole team and we'll respond quickly. Guys, if you have questions about anything, even if they're clients of yours or anybody who gets this video regarding forbearance or any of the things you're seeing in the news, give us a call. We're a $9 billion mortgage bank. We have a pretty good idea what's going on. We service 80% of our loans and we direct sell Fannie and Freddie, FHA, VA. So we have a pretty good pulse on the market.
Awesome. And if you're out there watching this video and you have questions specifically about the mortgage market and something that you want to ask Ace, go ahead and leave that in the comments and we'll address it next week. Thank you, Ace. Have a great week.
Thank you, guys. Talk to you soon.